I'm licking my lips at the opportunity. That's my take on the current market. I see this as an enormous gift to long-term investors. I think you framed it exactly right. We have all these short-term liquidity-driven negatives. We have the Mt. Gox distribution. We have the German government with $3 billion of Bitcoin. We have the U.S. government with $12 billion of Bitcoin, all moving to dump it on the market, which is driving the price down, and in classic crypto fashion, occurring on a low liquidity week, and therefore, blowing out futures positions, leading to cascading liquidations, and so on and so forth.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In today's video, Chief Investment Officer at Bitwise, Matt Hougan. Bitwise is the largest crypto index fund manager and has the 5th largest Bitcoin ETF in the United States. As of right now, they hold over 38,000 Bitcoin, worth roughly $2.3 billion.
But all of these things are short-term, non-recurring events, right? Mt. Gox is always going to send out its Bitcoin once. The Silk Road Bitcoin is only going to be sold by the U.S. government once. Against these short-term, non-recurring events, we have these long-term, massive catalysts. We have the ETFs, which are going to vacuum up assets for the next decade. We have institutions starting to embrace Bitcoin. We have Washington changing its tune from caustically anti-crypto to at least neutral and potentially very pro-crypto. I think as soon as we work through these negatives short-term, we're going to have a historical bull market run. And I'm really excited for the second half of the year. We just have to suffer through this little period because that's the way crypto works. But these will pass and the long-term trends are very intact. That's my view. So I thought they were going to be a huge success, but to say that I expected $15 billion in net inflows in 6 months, even I wasn't that optimistic. Perhaps because I come from an ETF background. I was the CEO of ETF.com. I spent 15 years in that industry. I know the history of ETFs. I knew that the most successful ETF launch of all time pulled in $5 billion in its first year on the market. And I thought Bitcoin ETFs could do better than that. So I was feeling optimistic that they would be the most successful ever, but I didn't know they would 3x it in 6 months. That's absolutely incredible. And it's even more incredible when you consider that there was a fair amount of assets in GBTC, the Grayscale Bitcoin Trust, which were just there to arbitrage the discount there. And those came out as well. And those don't count in that $15 billion figure. We overcame that short-term headwind, and then we added $15 billion on top. And yeah, I was optimistic, but I wasn't quite that optimistic.
The German government's wallet is down to just 3,856 Bitcoin, only 3 weeks after it started selling. As a result, the additional $222 million worth of selling pressure has pulled BTC's price below $60,000 over the past week. But signs of a potential bottom are starting to emerge. The end of the German government's Bitcoin selling could help Bitcoin find its local price bottom. For instance, technical analysis using the Wyckoff method points to a potential price bottom and a recovery above the $60,000 psychological mark, according to popular crypto analyst Mustache. The analyst wrote in a July 11X post, "I think we will see BTC back above $60,000 very soon." Other indicators are also pointing to a local price bottom, including the Coinbase premium, according to crypto trader Marty Party, who shared the chart below in a July 11X post. The Coinbase premium measures the price differences between Bitcoin on Coinbase, largely used by United States investors and Binance. The premium signals U.S. demand for Bitcoin compared to the rest of the world.
There are three really big groups right now. So there's retail investors is certainly a big part of the market. There are hedge funds who are usually engaging in trading strategies. And then there are long-term, professional, sophisticated institutional investors, which might be family offices or financial advisors or institutions. I would say in the first days, maybe in the first months, those first two groups were the biggest people. They moved the fastest. Hedge funds can just decide to invest and they invest tomorrow. Retail investors can decide to invest and they'll invest tomorrow. The long-term professional investors, they take longer. They do a due diligence process. They compare competing products. They talk to their clients, and there's a process. So it's a long-winded way of saying out of the gate, I think retail and hedge funds were the biggest drivers, and that's a little bit what you see in the data. But over the last few months, we've seen a significant acceleration in this other group of long-term buy and hold institutional investors as they complete their due diligence process. And I think going forward, that's going to be the biggest group. The reason I think we'll see, more inflows next year than we see this year is because that group just gains momentum and grows and grows and grows. So first these two groups, but the long-term institutions are coming, and they're coming in an accelerating rate. Yeah, it's actually the opposite. They're really slow out of the gate. So it's really hard to get an ETF to be $10 million, to be $100 million. The vast majority of ETFs end their first year with less than $50 million in assets. Small ETFs are challenging for institutions to buy because they're not liquid and they're not well established. So to give you an analogy, if you look at the gold ETFs, right, the gold bullion ETFs, which many people compare the Bitcoin ETFs to, they launched in the US in 2004. And they were really successful. Their first year, they had $1.5 billion in flows, and everyone thought this is amazing. But the second year, they had $3.3 billion in flows, and then $4.6 billion, and then $5 billion, and then it peaked at something like $19 billion in year 7. And that's what you really see with most ETFs is it grows year over year over year for like half a decade or a decade before it hits some sort of plateau. They're a slow-moving train that accelerates. And I think that will happen in Bitcoin too. We came out of the gate really fast, and we'll be well north of $20 billion this year, maybe 30. I think next year will be even bigger. I think it's going to be the same sort of building staircase in Bitcoin that we've seen in all other ETFs.
A cryptocurrency wallet related to Genesis Trading has transferred nearly $720 million worth of Bitcoin to the Coinbase exchange during the past month, pointing to the potential start of asset liquidations. The Genesis Trading labeled wallet has transferred over 12,600 Bitcoin during the past 30 days, worth $719.9 million, mainly in transactions of 500 to 700 BTC. The address currently holds 33,356 Bitcoin, down from over 46,000 BTC a month ago, on June 12, according to Arkham Intelligence data. The multi-million Bitcoin transfers come 2 months after Letitia James, the Attorney General for the state of New York, announced that her office reached a settlement with Genesis, requiring the firm to pay $2 billion to defrauded investors over its EARN program. The settlement requires the funds to be returned to Genesis investors and bans the company from operating in New York. The Crypto Fear and Greed Index, an indicator that tracks market sentiment toward Bitcoin and crypto, has fallen to extreme fear, its lowest level since January last year. The tumbling index score came as the price of Bitcoin failed to break above the $60,000 mark for the second time in the last 48 hours. In a July 11 post on X, crypto and forex trader Justin Bennett told his 111,000 followers that Bitcoin's price level had rejected $60,000 yet again, noting the formation of a potential rising wedge, which suggests further downside in the coming days. Bitcoin rallied as high as $59,485 on July 10, before tumbling back down to $57,000 in the following 12 hours. On July 11, BTC once again briefly rallied to $59,529, but failed to hold at that level. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.